Does that sound like what should happen in the real estate market? Can you see how artificial it is? Makes you feel rich. Hey, you can take out more debt on that, right? Makes it harder to buy. This market is broken, no doubt about it. And there's so many changes that are happening with it. Let's see where it ends up.
Lynette Zhang provides a detailed analysis of the significant shifts occurring in the real estate market and their broader implications. As real estate constitutes a major portion of the global GDP, recent changes have far-reaching consequences. For instance, the Ontario Teachers' Pension Plan is facing challenges due to rising interest rates, while initiatives like Baltimore's offering vacant homes for $1 each are also changing the landscape. Join her to gain a better understanding of the complexities of the real estate market and receive invaluable insights to protect your financial future.
But today I wanted to talk to you about what's happening in the real estate market, because there is a tectonic shift that's occurring, and it's going to impact everything, considering the fact that real estate is a huge part of the global GDP. That's all the money that floats around inside of the global system. Here in the US, that's roughly 30%. In China, it's even more important to the public because that's a lot of where their wealth is held. But speaking about wealth being held, a lot of the transformation, the financialization over the years have created a maturity mismatch between real estate, which is a long-term, not so liquid hold, and daily liquidity. So a lot of this real estate has been put into retirement plans, and that has an impact. And it creates a desire for the government and the central bankers to want to keep that reflated. And you might recall in 2008, real estate specifically was targeted for reflation. So let's talk about what's happening in this area right now, because the real estate infrastructure in the Ontario teachers' return is having a problem. Higher interest rates weighed on assets, including property. So as the mortgage interest rates have been going up, as the global central banks have been raising interest rates to combat the inflation that they created, well, real estate has floated right up there and is at nosebleed levels. So keep in mind, we know how interest rates work, right? When interest rates go up, the principal value goes down. The market value, I should say, not the principal value. The market value of all of that debt goes down. That debt is underpinning the value of all of the banks, let alone supporting the value in these retirement funds. So let's get back to this, because the reality is that all retirement plans, if you're counting on this, are very vulnerable to these popping bubbles. And make no mistake, not only has this bubble popped, but it's also in the process of morphing. So you want to make sure about what you're holding and to properly protect it. There in Baltimore, which unfortunately just had a huge accident with the bridge, their infrastructure, that's for another day to discuss, but I'm really sorry about that. It's horrible. Anyway, Baltimore wants to sell hundreds of vacant homes for $1 each, which may sound like a really good deal and could be. They're trying to revitalize areas that are rife with danger and rife with some not so savory things going on. So they want to gentrify the area. The Baltimore program is meant to prioritize individual buyers over developers who will have to pay $3,000 per home. Now, honest to goodness, do you think that the difference between, if a developer has to pay $3,000 for a house, do you think that that's a lot? I don't think so. And home repair grants of $50,000 are available to help with renovations, but recipients have to be pre-approved for construction loan. Let's see. Do you think that it's possible that some of these developers might just know how to game the system? So not only can they buy a property or whole blocks, actually, they're not going to buy property, they're going to buy up as many of these houses as they can for $3,000, but they can also get $50,000 of their repairs and renovations covered by tax money. What do you think? Who will take advantage of it? Baltimore plans to sell boarded up houses for $1 each in an attempt to revive neighborhoods that have been plagued by crime and despair. But we really know who's going to end up with the greatest opportunity. Additionally, on top of what's happening there, we've talked about the change in Basel III, and of course they've watered down a lot of that, but the 52 trillion housing market just changed forever. They've got to keep these prices elevated. The National Association of Realtors has agreed to changes that could end a collusion lawsuit, and this could change how the industry works overall. If the changes take effect, fees, instead of being hidden from buyers, would be negotiated with each party separately. This could lead to more homes moving out of the traditional broker ecosystem, which has already been happening with the advent of online buyers and sellers. And they've started to treat this real estate, which is a longer term hold, as a short term hold. There's that mismatch again. But let's talk about the potential outcome of this. How does this affect realtors? Well, this could lower the income of realtors who have long relied on these commissions as their primary source of income. And the benefits to home buyers is they could potentially save thousands of dollars in commission fees, making home ownership more accessible and affordable. Is it really the commissions and the fees? Are they doing this to lower the prices and therefore make more people have the ability to qualify for loans and debt? We've talked about how what's been happening has disqualified a lot of people. But like many other online real estate platforms, Zillow relies heavily on realtor commissions for revenue. The court settlement could potentially disrupt this revenue stream. And it's not just of these online purveyors. It's of a huge swath of the U.S. economy that's dependent upon those commissions. I'm not passing judgment on whether they should do it or they shouldn't do it. You just need to really be aware of what is happening so that you can determine what puts your best interest first. But I would definitely do a check if you're holding any of these fiat money assets. Definitely do a check on what you're holding and think about how this could impact you in a positive or a negative way. Biden targets rent gouging landlords as high housing costs factor into 2024 race. Well, really, since real estate is such a huge part of the global economy and the U.S. economy, as we enter this hyperinflationary state, one of the things that is quite common, and we saw it during the 2020 in New York, in many places actually, where rents were capped, but the costs to own and run that building were not capped. So you've got landlords with escalating costs, but it also diminishes their income. If you are a real estate holder that is dependent upon the income from these property, then the strategy that I developed addresses that specifically. You might want to, and I know you can't talk to us quite yet about this, but you'll be able to soon. Give us another minute. But this is critically important that wherever you're generating your income from, or wherever you plan on generating your income from, that you are properly diversified so that no matter what happens, whether you're right, whether you're wrong, you're covered. This is critically important in my opinion. Maintaining real estate costs escalate, but income is capped. So President Biden targeted landlords he claims are keeping rents artificially high. always point a finger somewhere else. Now, I'm not saying that that's not happening, but honest to goodness, is it the rents really being that much more valuable, or is it the value of the currency being that much less, and all of this money printing that's creating this inflation? It's about shifting the blame so that you're not looking at what's really happening. Look over here. Don't look at this man behind the curtain over here, or who's really making all of the manipulations happen. But the other part that I want you to realize very clearly on real estate is how, if they actually allowed all of the markets to be true supply and demand markets, that would impact all of that debt load. You would open up your 401k statement and go, what is going on here, right? It is critically important to keep people in the dark so they don't understand what's happening and they get to take as much wealth with it as possible. Housing costs are top issue for voters. So this jeopardizes or puts in jeopardy the elite's plan to stay in charge. When people are hungry and hopeless, they make choices that they otherwise would not make. This could support a revolution. Are we going to have a revolution in this country? Are we going to have a revolution in the world? I hope it is a peaceful revolution, but yes, I believe that we are. And I'm not the only one that thinks that. In the meantime, and this is coming, I'm 25, historically, 25 ounces of gold during your hyperinflationary event. When we see that cup formation, so when it is somewhere near a bottom, 25 ounces of gold can buy an entire city block, buildings and all. Now, you may or may not want that city block. We're about ready to find out the truth about real estate. But if you are in the right place at the right time with the right asset, the next step right now, it's accumulation. You got to accumulate as much as you can. And, silver for me is about barterability. Gold for me is about wealth preservation. And collectibles, actually, the pre-33s are about being able to keep it. This is about growth. Does that sound like what should happen in the real estate market? Can you see how artificial it is? Makes you feel rich. Hey, you could take out more debt on that, right? Makes it harder to buy. This market is broken, no doubt about it. And there's so many changes that are happening with it. Let's see where it ends up. Hold your purchasing power intact so you can take advantage of this wealth transfer. It's critically important.
As we draw the curtains on this enlightening discussion, remember to hit the subscribe button and turn on notifications to stay updated with Lynette Zhang's latest insights on navigating the ever-changing real estate market. Armed with the knowledge gained from this exploration, you're better equipped to make informed decisions about your financial future. Don't let uncertainty dictate your path. Join our community and embark on a journey towards financial empowerment. Thank you for tuning in, and we look forward to having you with us in future discussions.